Big news in the mortgage world. Fannie Mae and Freddie Mac recently announced that conventional mortgages will no longer have a minimum credit score. Now, is this a good idea? This video will examine the pros and the cons of this new guideline. Now, as a reminder, VA loans never had a minimum credit score, by the way. So Fannie Mae and Freddie Mac are really just matching what VA's already done. But more importantly, why are they doing this? Is this some sort of sign of the apocalypse, like the real estate crash bros would like you to believe? Or is there more to it? Now, here's what I think is that, first of all, there's a FICO monopoly. There's a company called Fair Isaac, which does credit reporting. And they have monopoly on the credit scoring models that we use in the mortgage space. The problem is that they're extremely greedy and they keep jacking up the price of credit reports. And if you talk to anybody in the mortgage space, we are very upset with them with what they're doing. And so they've allowed another company called Vantage to come into the marketplace and provide some competition. Well, the problem with that is, which scoring model do you use? If you're a 640 at one and a 610 on the other, which one's approved? And so you have a minimum score of 620. That becomes a big problem of which scoring model you use. And so what they decided was instead of trying to determine which one we're using, they just said, you know what, we'll just not use minimum credit scores at all. So is this a good idea? And what is actually going to happen? Well, VA has actually not had a minimum credit score in multiple years. I don't know if they ever had a minimum score. At least, I've been doing VA loans for a long, long time. They've never had one as long as I've been doing it. If you're a historian of VA loans, I would love to know. But here's the kicker: is no minimum score does not mean guaranteed approval. People all the time, people call me and I have a 479 credit score. I haven't paid a bill on time in 5 years. You can approve me, right? You said no minimum credit score. That's guaranteed. And I'm like, no, guaranteed does not mean that we approve anything. It's VA guarantees the loan, but that doesn't mean we guarantee everybody that can't pay their bills on time to get a loan. They're not stupid. So we do look at payment history, we look at job time, we look at assets in the bank, we look at financial stability, all those things to make sure that someone qualifies for the loan. What a crazy idea, right? So no minimum score does not mean guaranteed approval. So it's not the apocalypse. It's not '08. It still needs to pass automated underwriting. There is a system called the AUS that we all use. It still has to pass that because conventional loans typically don't even have a manual underwrite option. So it still has to pass the automated underwriting system. More importantly, nobody's really talking about this, but what's even more important is mortgage insurance companies still have to approve the deal. So mortgage insurance is when you put down less than 20%, you have to get what's called mortgage insurance. And there are third-party companies out there that their entire business is to insure the mortgage. Well, if you're putting down less than 20% and have that low credit score, one, there's no guarantee that they'll even do it. Even if they did, they can and most likely will jack up the pricing for those low scores to the point where why would you even go conventional, except for a very limited portion, maybe the house isn't FHA approved or not, and you can't go VA. Like those kind of scenarios, I can see where someone might take that loan with that jacked up mortgage insurance rate. Other than that, I just tell people just go FHA and not worry about it. So again, mortgage insurance companies have to approve this. So there's not like they're guaranteed to approve it. And like I said, they most likely will. Well, not most likely. They definitely will have different pricing based on different scores. They do that now, even before this happened. Now, it could lead to some scenarios where someone has a sucky credit score, but they have a lot of money to put down. Maybe they sold their house, all those kind of things. And I think that's a good thing. If someone's putting 50% down, this massive down payment, and even if their credit score is not so great, what is the real risk to the lender? If it goes into foreclosure, the lender is going to have more than enough equity to make back their loan. So it's not like it's a huge risk on the lender side. So I do think that we'll create a few of those limited scenarios. And so overall, a few more approvals, but it's not an '08 repeat. So as always, if you have any questions about mortgages or anything in particular, feel free to give me a call. My number is 937-572-3713 or scopro.com. Talk to you soon. Bye.